Everybody, and thanks for joining us on this webinar today. I'm Mark Windrum, the State Manager here on the West Coast for the FBAA. We are joined by Robbie Fidler, the National Sales Channel Manager for OnDeck, who will be presenting on SME lending trends and COVID-19, flavour of the last few months. Shortly, I'll pass over you to Robbie. However, just let you know, should you wish to ask any questions during the presentation, please provide these in the question chat box on your control panel. Robbie will then go through these questions at the end of the webinar, either verbally or by responding directly by message. We'll try and keep that as an interactive Q&A at the end. As you will be aware, the entire world is on home internet at the moment, so it might cause some lag or cut in and out occasionally, but please bear with us. You'll get the link to this recording following this webinar through, so you can view on our YouTube channel after. I'll now pass over you to Robbie to commence the presentation.
Morning, everybody, and thanks very much for taking the time to listen in today. Understand that it's been a challenging time for everyone over the last couple of months, navigating not only our own businesses, but also the businesses that we typically support. So hopefully you can take some insights out of today's presentation. And as the guys said, if you've got any questions, drop them in the chat box there and we'll get through to them at the end of the presentation. So as the guys said, I'm Robbie Fidler, the National Broker Channel Manager for OnDeck Australia, and look after our team of BDMs across obviously every state in Australia. So today we're going to talk through obviously the trends that we've seen throughout COVID-19. OnDeck basically facilitated a survey across 300 small business owners, and basically, our findings shed a valuable light on how brokers can use the current climate to connect with their SME clients, provide solutions to the challenges SMEs are facing, and in turn grow their own business by diversifying into SME finance. So how's COVID-19 impacted SMEs? Well, COVID-19 has brought significant disruption to the business community. All businesses, large and small, are being impacted as a result of lockdowns and social distancing measures that are having a tremendous effect on the national economy, business investment, and consumer spending. Close to 9 out of 10 SMEs say that they have been impacted by the coronavirus. For almost half the nation's small business, the impact has been severe, but the impact on SME basically hasn't been negative across the board. 86% of SMEs say they've been significantly impacted by COVID-19. 47% of SMEs say they've been severely impacted by COVID-19. But obviously some sectors are doing it tough, but then in some turn, others are booming. Sorry, my screen's taking a minute to load here. There we go. So here's how your clients' industries currently stand. Obviously, the industries that have been negatively impacted, the likes of gyms and fitness, travel, some public transport, the taxi and rideshare space has been significantly impacted. Cafes, restaurants, and fast food, obviously, again, been really impacted by the COVID-19, fashion and leisure retail, and even the education space. In return, though, some of the industries that we've seen that have been positively impacted, obviously telecommunications, groceries and supermarkets and food delivery services, pharmacies, alcohol and tobacco, online retail and subscription services. There's been a boom in home improvements, and obviously online gambling. Now, understandably, industries such as tourism and transport have been really deeply impacted by COVID-19 lockdowns, and obviously the border closures. Social distancing has made life tough for gyms and cafes and retail outlets, but the Australians spending, obviously more time at home. Other industries, obviously highlighting the home improvement space, are actually having a little boom. So small businesses are often good at adjusting to changing conditions And cafes may have empty tables, but are obviously taking up the advantage of home delivery services and other eating at home type scenarios. So smaller SMEs are showing a bit of resilience. What was especially interesting about our research is that extraordinary resilience of these SMEs and their ability to, basically diversify and change their strategy. Our survey found that 80% of SMEs with an annual turnover below 200,000 per annum are impacted by COVID-19. This compares to 90% of SMEs with a turnover above 200K. And this highlights the ability of smaller enterprises to basically act fast, engage in a more nimble response, and explore new sources of business income. The study also showed that smaller businesses can be more likely to resort to informal lines of funding to keep their ventures afloat. A recession could be more damaging to SMEs than COVID-19. The impact of COVID-19 is certainly broad-based, but the exact nature of the impact is surprising. Among those SMEs feeling the pinch, just under half say the outbreak has seen a loss of revenue. 2 out of 5 SMEs have said that they have had to slow or halt operations, and 1 in 4 businesses are experiencing delays in the delivery of their products or services. Yet for all these hurdles, the real concern for SMEs is the possibility of a recession, which 3 out of 5 believe is actually possible. 58% of the people that we surveyed say that a recession would basically see their revenue fall even further. So what's the road to recovery look like for SMEs? Of the 1 in 2 SMEs severely impacted by COVID-19, the big question is how long it will take for SMEs to make a full recovery from COVID-19. The results here are very positive. Even among severely impacted SMEs, 1 in 2 expect to recover within just 6 months. A further 18% are looking at a time frame of up to 9 months. And 1/3 of SMEs believe it could take more than 9 months for their business to gain lost ground. And I guess the most unfortunate point is that not all of them will survive. So basically what we can do to support SME clients is to understand whether they're tax ready. One of the biggest things that we took away from the survey was, despite the challenges of COVID-19, the SME community needs to prepare for an inevitable tax season, which really lies just a few weeks away. This is a key trigger point for brokers to reach out to their SME clients. Meeting tax obligations is a pain point shared by the majority of small businesses. And 1 in 4 say that tax is a key source of their business stress. Tax can also put a strain on cash resources, and some SMEs choose to borrow funds to meet their tax remittances while preserving their working capital for other purposes. Obviously SMEs at the moment have an opportunity to reduce their tax while positioning their business for growth. Are your clients missing out on valuable tax savings? These are some talking points that you can take to your clients at the moment. 1 in 3 SMEs are unaware of the investment tax write-off. The survey showed that basically a third of them have no idea that it's been increased to 150K for the instant asset write-off. 46% of SMEs would like to take advantage of the increased asset write-off. And this is really an opportunity to reach out to your small business clients, and see if there's a way that you can help them fund these. With all this up for grabs, it's no surprise that close to 1 in 2 SMEs would really like to take advantage of this. So the opportunities for the broker community, with 30 June just around the corner, time really is of the essence, and we're really urging brokers to connect with SMEs to act fast, to take advantage of the write-down. It's not just about tax savings, it's an opportunity for SMEs to strengthen their business long-term through increased productivity and efficiency. We've listened to SMEs who have told us they wanted equipment finance with terms that match the life of their asset. And in 2018, we expanded our SME lending offer to include plant and equipment finance. 41% of SMEs say that an online small business loan could help them take advantage of the instant tax write-off. 1 in 3 say that an equipment finance loan will actually be beneficial to the cash flow of their business. What sort of finance are these SMEs looking for at the moment? Chances are your SME clients would like to take advantage of this write-off, obviously. Post our survey, our research did say that close to 1 in 2 SMEs would like to use this valuable tax break to upgrade either IT equipment or invest in their business fleet. 1 in 5 want to invest in plant equipment for manufacturing, and other SMEs would like to refit their premises or upgrade their office furniture. And that's really been something that we've seen a lot of, with businesses focusing on home delivery at the moment. They've taken the opportunity to renovate their in-house dining facilities. And definitely over the last month, we've seen probably 10 or 12 of these scenarios where people are taking advantage of the downtime of their dining rooms and having them refit. Helping your SMEs become future-proof. Now it's time to plan for the future. As we look to the future, SMEs need to think about how they plan ahead, prepare for a gradual return to normal trading conditions, and position their business for growth and prosperity. As a broker, you can play a really key and pivotal role in these changes. And hibernation, doesn't really mean inactivity. Small business owners can use the current climate to get their business in the best possible shape for when these restrictions start to ease. The research that we did confirms that investing in plant and equipment really does underpin the majority of an SME and their finance needs. And the enlarged asset write-off really does give them a fantastic opportunity and a call to action in the current climate. So top skills SMEs need to succeed, and how you can and partner with them. You really need good communication. When we asked small businesses about the skills they believe as owners to achieve success, the ability to communicate and the willingness to learn actually topped the response list. These skills apply to your broking business as well. Now's the time really to be staying in touch with your small business clients. It's also a time to, I hate to use the word, but diversify across into small business lending if you haven't already. Because there's obviously going to be a growing and pent-up demand as we come out of these current restrictions. Yes, it obviously involves some new learning, but the brokers that I know, not only OnDeck, but other fintech lenders in our space will partner with and consistently report that commercial finance isn't hard and it brings a worthwhile reward to your broking business. And we're obviously here to support you on that journey. So your strengths as a broker, is being someone, that a small business is able to talk to, and in fact, your ability to communicate person to person in a really personable conversation is key, and also a strength that brokers have. Our research did find that just having someone to speak to is a key driver of trust among small businesses that are actually seeking finance. We know too that small businesses want to deal with an Australian-based lender. The survey did say this is something that is important to small business owners. And best of all, you can be there to help your small business clients secure the funding that they need, without having to deal direct with, a bank or them having to deal direct with a bank. And it saves your clients time, hassle, and will also obviously let you strengthen your relationship. You're a trusted expert that SMEs can turn to when it comes to finance. The element of trust is really crucial. The research that we did tells us that 1 in 4 SMEs have had their application for finance rejected by a bank. And more so that 2 in 5 of these businesses have gone cap in hand to family, friends, or even a credit card to try and raise funds, even though less than half of these SMEs feel they can be trusted. Mixing business finance with personal relationships can always be a recipe for disaster. But SMEs may feel that they've got no other choice. And that's where you, as a broker, can take the lead, highlighting the range of alternatives that exist beyond an SME's regular bank or their family and friends. So where to from here for brokers and your small business clients? When we face serious challenges, it can be hard to focus on tomorrow. But coronavirus will pass, and now is the time to lay foundations for the future. You can really play a pivotal part in your small business clients' future. Business finance is really no longer a vanilla product, and small business owners only have their regular bank to turn to. And a lot of them haven't really thought of or understand that there are actually alternative opportunities for them to source finance. Happily, 36% of Australian small businesses recognise that today they have a greater breadth of choice for commercial loans than ever before. And that's up from the previous study that we did back in 2018 from 30%. So an increase in around 6% of understanding that there's a breadth of choice now. And competition is good for the industry, and in the end, obviously the client wins in that regard. But that still leaves around 2/3 of small businesses that don't realise that they have the benefit of choice. And this is where you as a broker can really step in and help your small business and ABN and self-employed clients out. So growth in considering an online lender, this most recent survey that we did find that 26% of SMEs, over 1 in 4 actually, are open to the idea of using an online or alternative lender. Again, that's up from around 15% last year. Among the SMEs knocked back for finance by their bank, there are even greater confidence when using an online or alternative finance provider. And among those turned down by the regular banks, a massive 40% are happy to partner with an online small business lender. So what do SMEs say about online lenders, like OnDeck and our fantastic competitors? The statistics are helpful at giving us some insights into the challenges that small business owners are facing right now. One of the key things they say is that they have better standards, they have competitive rates, can be much better than banks. And the banks sometimes are just way too hard with approval for small businesses. This feedback really was a tremendous outcome for us as a business. Among the range of comments we received, SMEs really highlighted 3 key areas that I've just talked through here. You know, and the online lenders really adhere to a high standard of service and security, and our rates are not tailored to, you know, obviously a one size fits all. You know, it's basically tailored for each business and each deal. So the key to SME recovery, you know, it really is going to be cash flow. You know, we know that many, though not all, SMEs are doing it tough right now. Happily, you know, the vast majority of small businesses that we've seen that are severely impacted by COVID-19 do in fact expect to recover in less than a year. And obviously that key to being able to recover will be cash flow. You know, 3 out of 5 small businesses say cash flow will drive their recovery, and over half say access to cash flow will help them better prepare for any possible future crisis. You know, and this for brokers obviously provides opportunity. You know, 1 in 2 SMEs expect that COVID-19 have a severe impact on their business moving forward. You know, 57% of SMEs say that access to cash flow, you know, is going to be key to recovery. And as I stated before, 1 in 2 SMEs agree that access to cash flow will help their business better prepare for any future crisis that they may have. Now, the traditional lenders are obviously slowing this process. You know, we've obviously seen a fair bit of press and you know, other things going around about, you know, the timeliness and the bank and major lenders' ability to basically get money out the door and to support small businesses. You know, and when we surveyed these small business owners, you know, in normal conditions, 1 in 3 SMEs use business finance to purchase inventory. You know, as the restrictions around COVID-19 are lifted, it's likely that, you know, we're going to see a significant uplift in demand for business finance to facilitate that all-important restocking process. And even in the height of COVID-19, you know, our survey did find that 1 in 4 SMEs do actually plan to seek finance over the next year. The problem is that the traditional lenders, obviously they've got fairly complicated application processes. They're obviously fairly bogged down with their own COVID-19 red tape at the moment. And obviously this is going to really result in a slow response time. You know, and 1/4 of the SMEs that we surveyed say that, you know, bank funding can come with a cost beyond an interest rate, you know, being that the slow approval times can bring the opportunity cost, you know, up. So yeah, the speed is rated at one of the least important factors when choosing a loan. So it's an interesting insight. Planning for tough times. Your expertise can really help small business owners prepare for difficult times moving forward. The small business community is aware that challenges can lie around every corner, and 90% of SMEs expect to be impacted in the future by health events, economic events, and other slowdowns. So 65% expect to feel the pinch of climate-related events like bushfires. And as a broker, you can help your SME clients prepare for future disruptions and other matters. Really, only 1 in 2 of Australian small businesses proactively plan and prepare for major disruptions. And 22% just wait to see how everyone else is responding, actually before even taking any action. What's even worse, I guess, is that, you know, 1 in 5 will just follow the herd. So our support and your growth, you know, OnDeck provides all the tools, support and training that brokers need for a seamless and fairly successful transition into small business lending. You know, and I can really say, you know, that all the lenders in our space, you know, will do anything in their power to support brokers throughout the current climate. I know that, you know, just having a BDM that you can call and workshop a deal, or talk through a scenario, or even a hypothetical, can be a really powerful thing as a broker. You know, we've really sort of thought into this, and you know, we've provided a COVID-19 resource page. Obviously, the links in the deck will be shared thereafter, but you know, you can head to the link there for some insights that you can also share with your SME clients, and information around government stimuluses, some practical tips, you know, some other valuable resources from some trusted partners, and also, you know, some really inspiring stories from SME owners on what they've done and how they've adapted to the current climate. So, you know, by diversifying and partnering with, you know, a fintech or a specialist lender, you know, can offer you a complete solution for your clients, and increase the chances of retaining that client for the future. You know, with more frequent and additional financing solutions or opportunities. Adapting to change can be challenging, I know, for obviously some time poor brokers, and I guess that's why we've really tried to expand, you know, obviously the support and collateral and things that we have available in our broker channel, and it's been accompanied by tripling our business development team over the last 12 months, you know, and some of these people have really been handpicked from the ranks of our most experienced sales experts within our business. You know, we do have your back. You know, diversifying and partnering with us or a specialist fintech lender really does increase the chances of retaining that client of yours for the future. We've got a partner resources page again there. You can see the link on the screen. But basically, you know, we can supply everything from current product parameters, you know, send ready EDM templates, and even social media assets, all white labeled, put together, and ready for you to send out to your clients. You know, if it's training, again, there's a team of BDMs there that can walk you through all of the opportunities that may already exist within your current databases. And yeah, any questions, we're always here to support you. So to really sum up what I've just talked through now, you know, Australian small business community is having to adjust to the unprecedented challenge that COVID-19 has presented them. You know, but as I've sort of talked through already, not all the SMEs are struggling. You know, the really good news is that the vast majority of small businesses do expect to get through this crisis and be back on track, you know, in around 9 months or less. As the end of the financial year approaches, and as the restrictions and lockdowns, you know, start to ease up, brokers can really help their clients access enlarged instant asset write-off, you know, or either other cash flow opportunities. You know, there's some opportunities there to obviously save on tax, and you know, that then gives you an additional conversation point and ability to explain other funding options that are all important. And you know, obviously cash flow is one of those. You know, it has had a big impact. It's been a tough time, but you know, I do think the opportunities that lie over the next 3 to 6 months are going to be exceptional for brokers. So that's it from me. Diversifying into SME, really can get your business growing. Talk to the OnDeck team, or any of the fintech lenders teams, and really find out how you can partner and support your small business clients. Or you can even chat with us via WebEx or Zoom. So, which seems to be happening a lot these days. But yeah, that's it. There's my contact details on screen now, but if you've got any questions, be happy to open up the floor.
Thanks very much, Robbie. Yeah, but we do have currently 3 questions. I'll fire those your way at the moment. So the first one is, can someone with an ATO debt of 100 grand plus get SME government guaranteed loan of 250,000?
So there's probably a 2-part question there. Obviously, it is quite common for small business owners to seek finance to actually meet their tax obligations. So the way that I know a lot of the fintech lenders in the space like to work is they like to have a certain percentage of the annual turnover, no more than that in terms of tax debt. So if the customer has tax debt, it will be something that will be taken into consideration throughout the application process. You will find that most fintech lenders will not have an issue with the fact that they have a tax debt. What they'll like to see is that they're making consistent and regular payments to the ATO, and they will take them into consideration when calculating serviceability. So it won't stop them from actually getting a government guaranteed loan. And obviously, in terms of the government guaranteed loan, they can borrow up to 250,000 if they are able to service that. And obviously, a fintech lender's not going to be, they'll take it into consideration when calculating servicing for tax debt. Does that answer that question?
Thank you very much. Okay, the next one we've got a few more piling in now. The next one we've got is from Roman. What is OnDeck's credit appetite? Is it like with the impact of COVID-19 on SMEs? If turnover is low or non-existent, how do we get to an approval?
Yeah, it's a really good question. If the turnover has been, severely impacted, we're going to have a fairly solid look at that application. The way that we're sort of operating at the moment is, instead of having a restricted industries list, which is typically the way that the fintech lenders like to operate, we've got now a focus list. So at the moment we're operating on a focus list of industries, which I'll be happy to share with you so that you can share that with the listeners today. But essentially, we've highlighted some industries where they're either seeing little impact from COVID-19, or in actual fact, they're seeing an increase in revenue and business from the impacts of COVID-19. So yeah, look, it's definitely something that is a case-by-case sort of scenario at the moment. Yeah.
Right, well, I'm not hearing a lot of no's. It's very good. Next one is, can brokers refer clients to OnDeck for coronavirus SME guarantee scheme, 250K unsecured with 6 months repayment holiday?
Yeah, so obviously we were one of the 6 non-bank lenders named as being eligible to offer loans under this government guarantee program. Obviously, the challenge for businesses like ourselves is that typically our loans are a 12 or 24 month term, and the government guarantee would like us to offer that out to 3 years. So for us, we've had to sit down with our financiers and come up with a solution to be able to offer those government guarantee products. We'll probably have a little bit more detail on it in about the next 7 to 14 days in terms of what it will look like. And at the moment, we have got a list of people that have sent through expressions of interest to be able to borrow under that scheme. You know, it's very sort of public knowledge what the scheme looks like. So, you know, obviously loans out to 250K, a 6-month, you know, no payments. Obviously, there's some things that, you know, I think it's important for brokers to be able to educate their clients on, is that, you know, the interest cost will be amortized over those 6 months period, and it will actually affect, you know, the annualized simple interest rate that the customer actually pays. So, you know, you just have to weigh out what's the best solution for the customer.
It is ever evolving at the moment, isn't it? Right? It's hard to imagine days in the coronavirus saga. So it feels like, well, it was a month of Sundays in April, but we're only just into May now. So it's crazy time still. Now, there's a couple of, I'll just combine these. We've got how can I be accredited, and what are your current turnaround times?
Yeah, it's a good question. So if anyone would like to be accredited, my email address should be still on the screen there, I think. You can shoot me through an email and I'll give you an introduction to your respective state-based BDM. In terms of current turnaround times, we saw a deal last week, you know, just as a live example from a connective broker in Queensland. A new broker to us, so wasn't registered. We were able to do their accreditation, submit their application. So we accredited them Monday, we submitted the application Tuesday, it was approved Wednesday, it was funded Thursday.
Very good. Oh, that's great for newly accredited brokers.
Taking a good shot, yeah.
Now, next one, do you lend less to non-asset-backed business owners?
No. I know that this is a common thing for some fintech lenders to do in our space. We do not require the business owner to be asset backed. You know, we're really looking at the strength of that customer's business. You know, whether they have, it's nice if they own a property, and obviously it's a nice profiling type question for us. But our max loan, you know, up to 250K, we would always have looked at in a non-asset backed director as well, but we don't require them. I know that some of our competitors do require them to be asset backed once you get over 100 or 150K.
Awesome. Next one, what level of funding evokes the GSA placed over the business? For example, plus 250 grand.
Probably again referring to some of our competitors. I believe we're one of the only fintech lenders in Australia that actually does not place an all-PAP, a GSA, or fixed and floating charge over the customer's business. I believe we're one of the only ones. So it does enable the broker to have flexibility in offering multiple finance solutions. And quite often we become part of a solution rather than just the solution. So yeah, we don't currently do anything in terms of GSAs, no matter what the loan size is.
Great, thank you. Do you have a line of credit product?
No, we do not. We were working on a line of credit product prior to COVID-19, which has obviously slowed the development of that product down slightly, but yeah, we do still envisage that it will be sometime this year, probably thereafter June or July.
Watch this space then.
Watch this space.
Now, what are your current turnaround times for application settlement? Will OnDeck consider the training sector at the moment?
Yeah, good question. I can actually speak on this one from a deal that I actually saw 2 weeks ago. It was an online training organisation, which is obviously, you know, doing quite well in the current climate. A lot of people are taking the time that they've got up their sleeves to do some additional study or training, and some workplaces are actually assisting them in you know, using that as a good filler of time as well. So yeah, we can look at them. We did this deal. It was 2 weeks ago. The Sydney-based business, and the loan was around 150K over 12 months.
And that's a really important point. I think a lot of the brokers I'm speaking to at the moment are using the downtime, if they do have it, to use it for professional development and various training things as well. So it's good use of the time if you're not on the busy side of things, then it's definitely a good idea. Like using this webinar, for example. And have OnDeck got any SME guarantee scheme specific products?
Sorry, say that one again for me, Mark.
Have OnDeck got any SME guarantee scheme specific products, and what rate are they at?
Not yet. As I said before, we're sort of wrapping up the fine points around what our product will look at. If I was a betting man, it's going to be fairly in line with what is already in market. Get Capital has been one of the first ones to get a product out the door, and if you look at what they're doing there, ours will probably be somewhat similar. Obviously, it's important to consider that the cost of funds for the fintechs is obviously very different to the big banks, and the way that we have to actually provide the loans is very different. So, I definitely I'm not going to set the expectation that it's going to be bank rates because it's just not possible for us. But what we will be able to do is to lend to new customers, and brokers will be able to obviously continue to earn commission and brokerage on these loans, because we know our business is pivotal and really does rely on brokers, and it's a very important distribution channel for us. So we'll be sure to make sure that the broker is remunerated, and the customer's price is based on the level of risk that is required for us to lend to that business.
Yeah. Okay, this is a long one, so just bear with me on this one. If business turnover is high but net profit is low or making a loss, how would it impact the lending decision? Does a business have to make a positive net profit to be able to obtain finance?
Yeah, it's a good question, and it's definitely something, having come from a commercial finance background myself. The difference with the way that the small business and fintech lenders work is we take an actual transactional view via bankstatements.com or a similar type of platform, and we're traditionally, if I'm looking at the scenario that's been presented here, if we were lending up to 150K to that particular client, we wouldn't actually ask them for their financials. We would literally do an analysis across 6 months worth of bank statements, and that will give us a true serviceability representation of their business. So to answer the question in short, no, it's not going to make a material difference to the application, because in most cases we won't ask for the financials. If it is a case where they're wanting to borrow, somewhere between 150 and 250, we do traditionally ask for 2 years of financials. But the fact that they're making a loss is not the be all and end all. What we're really doing is taking a view on what's actually happening with their business in the current 6 months or 12 months worth of bank statements that we've collected. So,
well, the bank statements, tell a big story, don't they? It's exactly what they're spending, it's exactly what they're getting coming in as well. So it's
exactly.
Not exactly a miracle knowing that, but it's a very accurate representation.
I would trust bank statements over financials a lot of the time.
All right, next one. We've got a few more actually, so these are good questions. Is an importer, distributor of grocery and food items considered as an impacted business for lending purposes currently?
Look, I remember seeing a deal that sounds exactly like this just before COVID-19. It was actually a cheese business, a important distributor of cheese, and a really fantastic business actually. Look, food at the moment from our perspective is really important. Obviously, people are eating at home more and more. So what we'd be really looking at in this case would be, who are they distributing to? Is it going to people that are buying it, from supermarkets, or are they buying it from delivery services? And we'd just be trying to understand, how they're actually going to continue to generate revenue through the current climate. I don't believe, off the top of my head, that it's a restricted one for us at the moment. So it would be something that we would happily have a look at.
Well, I bought a truckload of cheese on the weekend, so I could have probably kept their business afloat just on my own on the weekend, but that's okay. Will OnDeck accept planes as ABS?
An aeroplane.
Well, then there's a few parked up everywhere at the moment, so.
I actually remember talking to a guy about a really interesting airplane deal, and it was only a couple of months ago. And he said, "Oh, I've got to do an equipment finance, deal on this airplane." And he's like, "Can you do it?" And I was like, "How much is this airplane?" And he was like, "Oh, it's only 125K." And I was like, "How's that possible?" He goes, "Oh, well, it's a really old plane, like, I don't know, call it 35 years old or something. But it's got a new motor, and the guy just needs to have for his Australia Post contract 2 airplanes. So he basically has one brand new plane that he flies all year, and he's got this old grunter just parked on the tarmac as his second plane for his Oz Post contract." So look, I've seen weirder, put it that way.
Never say never on that one then, for sure. Excellent.
If I can't help, I'll point you in the right direction.
Is accreditation direct with OnDeck?
Look, it's completely up to the broker. If you have an aggregator, it's obviously that's fine. We can work through the aggregator. If the business is a credit license holder, then we can look at a direct accreditation. So you can go either way.
Interest rate and charges. So the average range, if you can give that, it's a bit like how long's a piece of string, I guess. But
yeah, look, in our space, pricing really is based on the risk. If the business is been trading for 10 years, they are obviously asset backed in terms of a director profile, and they've got consistent revenue in their business. You can see things, in terms of an ASI, anywhere from 9 to 29%. It really is based on the level of risk that we're required to take to lend to that business. But if I'm talking an average number, it's probably somewhere between 17 and 19.
Cool. And we do have a follow-up to the plane question as well. The fleet of planes are used for flight training.
Roger, have heard of flight school.
Roger, of course.
Yeah. I know that we've done flight simulator equipment in the past. So yeah, look, it was for a flight school as well. Why not? Let's have a look at it.
Excellent. And the final one we've got is, what's your commission structure?
Yep, commission structure is really easy. It's 4% plus GST upfront, and obviously throughout the life, when the customer does become eligible at certain periods, OnDeck will actually reach back out to the broker. So we never go to your customer directly. The broker is always in control of the customer. I know that can be a bit of a bugbear with brokers, and some of our competitors will actually reach out directly to their client without speaking to the broker first. But we'll actually call the broker and say, "Hey, Mr. Broker, your customer is eligible for a top up, a new loan, or some more money," and we will actually pay them 2% plus GST on any additional capital that they take up thereafter. So it can be a nice bit of annuity throughout the life of that customer. And typically a customer that takes this type of product will need funds more than once a year, and will quite often, on average, do about 3 continual ongoing transactions.
That's great. Cool. Well, that wraps up the questions there, Robbie. So thank you very much. I think the questions are actually really good, interactive ones, and gave us a lot more of an idea on how you do business there, which is great. Oh, we've got one more come through. Food trucks. Do you do food trucks?
Food truck. We've done a food truck before.
Excellent.
Yep.
Well, hopefully that answers that one. Look, so thank you again, Robbie. We do have another session for the other guys tomorrow, so I'll look forward to seeing you then. But what we'll be doing for all of our viewers today is sending out an email with CBD codes, and also we'll have Robbie's email on there as well for any follow-up questions that you might have. There's also going to be a link to our YouTube channel if you did miss anything, and you can obviously review what we've done today and watch that at your leisure. But look, thanks very much again, Robbie. And thanks very much for everybody's time today.
Thanks, everybody. Thanks, Mark.
See ya.